Hello traders, welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Thursday, January 2nd, 2013. We hope you had a nice holiday and a happy new year, and we look forward to getting back to our normal schedule. During the holiday, the S&P broke out above the previous multi-year high at 1812 and rallied up to a new record high at 1846. The rally can be seen in two contexts. First of all, the pullback to the FOMC low. First of all, the S&P had sold down from the previous multi-year high at 1812 ahead of the FOMC session. The news media had hyped the fear of Fed tapering, which served the interests of the large financial institutions and gave them the excuse necessary to shake out weak longs through the previous trading range. After trading down to 1754 prior to the Fed announcement, during the FOMC session, S&P futures retested the low at 1760 before short covering all the way up through the previous trading range. There was a minor pullback to the 1795 price level before the S&P auctioned above the previous multi-year high at 1812. We've broken down the trading range here, showing the new developing trading range contrasted to the previous trading range, and we've done that to indicate that the up move was primarily a short covering event. In other words, prior sellers bought back their short positions. The New Year's Eve high, up at 1846, corresponded with our extreme price excursion target, which was calculated off of the prior multi-year high at 1812. During the end of the year holiday rally, there was no significant pullback, and the market continued to trade higher day after day until New Year's Eve. The Follow the Bots computational model had estimated the S&P would encounter a stopping point or an exhaustion point, in other words, a climax to the up move at or near 1845, and would likely sell off from the multi-year high and pull back at least the distance of an average daily range. However, the light volume that occurred during the holiday session gave us little faith in the 1830 pullback target, and we had noted in our daily market commentary the likelihood that the 1824 price level, where statistical volume had traded during the up move, was a more likely pullback candidate. During today's session, the S&P indeed sold down from the multi-year high, pulled back initially the distance of a daily range below the 1846 new multi-year high level, and paused briefly at or near the 1830-1829 price level. The S&P auctioned back up off the low and encountered resistance at 1834. Notice that when the market sold down from the high, which occurred during the open of the Globex session, S&P futures initially auctioned back to 1840 prior to today's open, and then sold down below the 1834 Globex low as price pulled back the distance of a daily range from the multi-year high. There were two retracements up to 1834, both of which encountered responsive selling that corresponded with the initiated selling during the breakdown. After pulling back to the 1839 level and auctioning up to 1834, when the S&P pulled back to retest the earlier low, initiated selling entered the market at or near 1830, resulting in the S&P selling down to the 1824 price level. S&P futures paused twice at the 1824 price level and auctioned back up modestly to 1828. However, on the third retest of the low, price breached support at 1824 and traded down to 1822, which we deemed in the context of today's session was a shakeout of the week longs and or a probe for stops below the previous low. S&P futures held support during the 1822 pullback, never retested the low, and auctioned back up to 1828, 1829 at or near the earlier session pullback level and where the initiated selling had occurred when the market retested the earlier low. Coming into Friday's session, there's minor resistance here at 1830. Better resistance up at the 1834 level, as well as the 1838 and 1840 area. Regarding the 1838 price level, during the holiday prior to the rally up to the new multi-year high, the S&P encountered resistance at 1838 and 1840. We feel that in the context of today's low, the 1838 is a more ideal retracement, i.e. short target. However, first the S&P has to auction above 1830. While we deem this to be minor resistance, it currently plays a role in the price discovery phase. Should the S&P auction back down and retest the low at 1822, 1824, and then retest the 1830 price level, we would not expect to see the market hold resistance there once price discovery has determined that the selling pressure has abated at today's low. In the broader context, the ideal pullback target is down at the previous multi-year high at 1812. However, we do not think the S&P will sell down to 1812 tomorrow. We do think the 1812 price level will be retested in the future. More likely than not, we think the S&P will attempt to auction back to the high ahead of earnings season. Then, depending upon the outcome of earnings season, if indeed more companies disappoint and miss their earnings estimate, we would then expect to see the S&P sell back down and retest the previous multi-year high at 1812. The sell-off from the multi-year high during today's session is worth taking note of. It falls into the context of William Hamilton, the author of Stock Market Barometer's comment, "Trees don't grow in the sky, and markets don't go up forever." That concludes our recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.